Welcome to day two. By the way, if you're someone that is watching the recording or if you're someone that's watching on YouTube, there's a registration link below this video. I would advise that you click it. That way you can join us live for the next day's session, participate in the fun that we're having here, and be in the running for the next giveaway. Ryan was our big winner yesterday, which is awesome. Excited to see who's going to win our prize today. Now, yesterday, right, we kicked off things talking about the knowledge gap, right? We talked about information plus discovery equals knowledge. We talked about how discovery is achieved through a process, through practice, through observation, through experience, and how information in its own right, without discovery, will end in destruction. And that's where a lot of people are at. They have a lot of information, but they don't have the discovery part. Today, we're going to build on that. We're going to talk about how to put some power to that knowledge. But first, I need to ask yourself two questions, right? One, Jason asked it already. How many of you guys did the trader assessment? Type in a Y if you did. Still going through it, learning a lot about myself. That's very important. Trading is a journey of self-discovery. Trust me on that. As you get more experience, the line starts to blur, whether your life affects your trading, trading affects your life. It's actually rather interesting. Tom said, working on it. Two, give me something that you took away from yesterday. Something new, something exciting, something you thought was powerful. Jason said we had about 215 people fill out the gap assessment. Whew. That's more than I expected, Jason. That's good. That is really good, yeah. Is it because I shamed you and said 50% of you wouldn't do it? But give me something you learn. That you need to know how to use the tools. Candlestick patterns, tools. The real power of knowledge is application. 3-point trend recognition was useful. Rising and falling wedges, tools and indicators, knowledge, action, power, better understanding of tools and indicators, homework, which really made me dive into double bottoms and double top as well as head and shoulders. Paid more attention to structure. The story of my son playing basketball. Fewer tools. Having tools is not enough. You have to have the knowledge to use it. Double top, double bottom. Good. I love these answers. I love these answers. These are actually real practical answers. Awesome. So in today's sessions, we're going to do a few things again. We're going to talk about adding potential power to that knowledge, and how we do it, how we turn that knowledge into something that is usable, something that is powerful. To do so, we're going to talk about how to add a plan, a strategy, an advantage, a statistical edge to that knowledge, and probably talk a little bit how if you don't, you're just going to end in destruction. So we got some cool sessions coming up. We're going to kick things off today, however, on the charts. And I was debating really since yesterday how I wanted to handle this, because usually we do the chart work kind of after we teach the stuff. And I don't want to overstep on anyone else's session. So we're going to do this, right? We're going to take a really light overview of the charts. I have a lot of trading opportunities on my radar. I don't know how many we'll get to, but we'll try to hit different types in different markets just to show you kind of a wide range of what's available. We're going to take a very broad look at it, meaning I'm not necessarily going to go through, I'll probably talk about entry stops and targets, but we're not going to dig too deep into like actual strategy. Because what we're going to do in session 2 is Jason's going to come in. He's going to talk about what makes a strategy. He's going to talk about the importance of rules-based trading, risk reward, and all of that fun stuff, right? So does that sound like a plan for today? You can ask questions. Don't get me wrong. I would please ask questions when we look at the charts. Just understand we may go through a little bit quicker instead of like dialing in on one for like an hour. William said candlesticks, no difference of red and green. I'm gonna you guys are gonna go in some form and start saying that, and you're gonna get me in trouble. Keel said it doesn't matter whether it's red or green, and someone's gonna call you an idiot, and then they're gonna attack me, and I'm gonna love it. All right. let's start off. Where do I want to start off at? Let's start off on the pound Aussie. And some of these are ones that we reviewed from the Trading Edge video last week. And again, you can see my VS1 level set on here. Most of them should be set to the time frame. And what I mean by that is just as a reminder, the VS1 levels, these are these boxes, right? These are the visual support and resistance indicators, right? They're blue and purple. You'll probably see green and red on some of my charts as well. What you can do with these is you can set them to really whatever time frame you want. So typically what I'll do is on the lower time frames, I'll have them set to a higher time frame. So if I'm looking at a 60, I'll have my VS1 set to say a 4 hour, right? Typically, because my normal process of going through the chart is I do higher time frame analysis, top down analysis, where I start with a higher time frame. I identify and make a prediction. I then go down to the lower time frame to decide how I'm going to get involved and ultimately get involved. So understanding that higher time frame structure is important to me. As we're here on the daily, some of these are going to be set to the actual time frame. So just to give you an idea, we can, if some look bigger and smaller than others because they're set to different types of structure on different time frames. But we can take a look at the pound Aussie here on the daily chart if you want to follow along. And you can see that we essentially had a rotation in trend, right? Price action was coming down. We had an outside return. We had a new structure low down here. We violated our previous highs, right? And then we came back down and we essentially went sideways for a little bit. And when the market is going sideways, what do we call that? What do we call that when the market is going sideways? Right? Consolidation. And consolidation is cool. Consolidation does offer trading opportunities. I think there's a big misconception out there that when the market's in consolidation, that it means there's no opportunities to trade. Yeah, there are lots of opportunities to trade. And actually across the board, Darren, I was going to just, I decided not to do this. I went through this morning, I did my Enigma scan, the pattern recognition tool, and there was about 10 charts that just had patterns on, like all types of potential patterns. I was tempted to kind of just put 10 charts on my screen and just click Enigma and be like, yeah. But it got really, really crowded and messy, so I decided against it. But there's a lot out there, and we'll probably look at a few as well. But consolidation does bring pattern opportunities, which if you're a pattern trader, or maybe if you're like a channel trader, support and resistance back and forth, those are opportunities as well. We also know that consolidation or contraction leads to, and these are little tests from yesterday, see how much you were paying attention. Contraction leads to expansion. So when we see these consolidative levels, what we do is we essentially bracket them. We draw out a line, or if you have the VS1s up, it'll be there for you at the top of the range, at the bottom of the range, and we'll just wait and we'll say if price action can violate that level of structure, whether it's support or resistance, then we would expect a move higher. And that's what you can see just happen here with pound Aussie, right? You can see our VS1 level here. What did we recently do? And by recently, I mean about a month ago. We broke out to the upside, correct? So we can identify that break to the upside, right? We don't have a confirmed trend yet, but we can make an early prediction that price is likely to go higher. So we ventured higher. We've put in a little bit of a retracement here. You can see we're starting to form a fresh VS1 level. And what I'm waiting for in this opportunity is what I call a fresh break. So I'm not interested in any type of pullback here, right? But if, and you're going to hear me say if then a lot, right? If we can violate this level, that's going to confirm the bullish move for me, right? I can identify the higher high, higher close. That's going to allow me to make a prediction that price is likely to go higher. Then the question is, how can I get involved? And this is going to depend on what type of trader you are. Look, if you are a breakout trader, I'm not personally a breakout trader. Again, there's nothing against it, just not my style. If you're a breakout trader, guess what you can do? You could put a buy stop right up here. And as soon as price breaks to that level, boom, you're involved on the way up. Now, the benefits of being a breakout trader is you're going to catch every breakout. If the market just explodes up and never comes back, guess who's going to be involved? You. What do you think the downside of being a breakout trader is? Breakout. What is the downside? Yeah, the fake outs. You can get a fake break and the market could come down and just do something like that, right? So me personally, I like to call myself a pullback trader. I like to wait for the pullback. So what I'm waiting for is a pullback, or after we get a break, if we get a break and close above, right? Then I look for a pullback, and I looked for an opportunity to get involved here. Now again, there's pros and cons of a pullback as well, right? Being a pullback trader, you're going to be more patient. You're not going to deal with necessarily the false breakouts, but what are you going to miss? What are you going to miss? Yeah. You're going to miss the opportunities that never look back. Yeah. And so some of you right now, I can see the gears in your head kind of, rolling around. You're like, wait a minute. Okay. So if I'm a breakout, I can get involved in the fake breaks and more, but if I'm a this, I may miss that. What do I do? And this is extremely important to understand and accept. And I don't think you're going to be successful as a trader until you accept this, right? There's a give and a take to everything. Right? There in trading, in life, there's always risk reward. There's opportunity costs, right? There's no perfect strategy. There's no perfect system. In order to do something, you're always going to give up something else, right? If you want to be super aggressive, right? The benefits of being super aggressive are that you're going to catch every single move. That's awesome. Catching every single move means you're also going to catch every single losing move. Being conservative means you're probably going to lessen the likelihood that you catch the losing moves, but you're also going to miss out on a lot of the winning moves. So there's no wrong or right. It's all about your personality. It's all about what is the right fit for you. Because at the end of the day, right, your trading success is going to be dependent on how mentally stable you are, your trading psychology. We're going to teach you all these strategies and all this fun stuff, but it means nothing if you don't have a strong psyche, if your mind state is not right. And when you can fit trading around your life and the person that you are, right, your personality, you limit the possibility to make those mental mistakes. And we all know that mistakes kill traders. So there's no right or wrong answer. It's all about what is the best fit for you. And that changes over time. I started off as someone who was super conservative, and I got more and more aggressive as I went on. So I think that's important to understand. So let's talk about this a little bit, right? So I know what I'm looking for at this level. I'm looking for a higher high, higher close above this freshly formed VS1 level. That will give me an indication that price is likely to go higher. I know I need a pullback in order to get involved, just because that's my personal trading style. But let's talk about where price can go, right? Because there needs to be an opportunity to make profit, right? There are going to be a lot of setups in the market that just don't have opportunities to make profit, and those are going to be pointless. So if price is going to go higher, where do you think price is likely to go to? Jason says, if you guys ever hear that there's a wrong way to trade, run a mile. Yes. Yep. And when he says that, he means by a technical perspective, right? So like if you're out there saying, hey guys, I trade with no stop loss and 5-to-1 inverse risk reward, and I risk 20% of my account on every trade, then I think you can get away with saying there's a wrong way to trade. I mean, still not our place to judge, but I guess that would count, right? But no one, I don't think anyone actually does that, or if they do, they don't last too long. But yeah, it's funny. We've spoken to a lot of professional traders in our time, and I've never heard one, Jason, say there's a wrong way to trade, aside from like risk management, trading psychology. That's aside from that, but like from a technical perspective, yeah. Yep. So if we go higher, where can we go to? Well, ultimately we can go to our next VS1 level, right? Up near 2 even. I would default a little bit to the $2 even handle just because it's a psychological number, right? And there are many kind of smaller levels of structure in between, right? So you have your bigger level of structure right here. Again, we're going to shift that down a little bit just to get to the even handle number. You're going to see smaller levels of structure in here. And how do we identify, or how do we know these are smaller levels of structure? Well, remember what we learned yesterday about just reading a trend, right? We talked about how the skill of reading a trend, reading price action is an overlooked skill, especially by a lot of new traders because it's not sexy. No one sees how it actually helps you make money, right? You're not entering a trade. And again, it's the most important thing because everything is going to center around that. So when it comes to picking targets, something that can help is understanding support and resistance, right? We know that each of these swings in the market, as the market ebbs and flows, these are going to be levels of support and resistance. They could be minor levels, but still levels in their own right. So whenever you see levels like this, guess what? These can be areas where you can look for potential profit opportunities. And again, which ones you pick, that's going to be on you, depending on how aggressive or conservative you are. Does that make sense, guys? See, there is importance of knowing these ebbs and flows. Oh, Q, why do we need to know them? It doesn't mean I can enter a trade. Well, I mean, it gives you an idea of where to exit a trade. Now, something else we can do as well, we can take our Fibonacci retracement tool. We talked about tools a little bit yesterday. I'm going to take my Fibonacci retracement tool and I'm going to grab it from the absolute high here to the absolute bottom of this range, so the full move. And I'm going to see if there are any Fibonacci levels that come into play as well. Do you guys see anything? Well, I see a big 618 Fibonacci retracement right here in the middle, lining up right at this previous level of support or resistance, excuse me. The 618 is in red for a reason, because it is the golden mean. It is the most powerful fib out there. We have a 50% a little bit lower, again, if you're conservative. We have a 786 lining up right with our VS1 zone a little bit higher. So multiple levels. But when looking at this chart and making a decision, and I'm more of a conservative trader, just full disclosure. I'm not one that I don't need to shoot for the super great move. I want to get out at the safest place. I'll take my money and I'll be happy with that. I don't need the home run trade every trade. For you guys that work with me every day, you know that I'm rather conservative. It's not a negative, right? Not a positive. Just it is what it is. That's just my style. But this seems like a very good level, right? We have a 618 retracement. We have a level of structure. This level of structure right here, this minor level of structure, this is something that's also called an ice zone or a structure swap, right? I always called it a structure swap. And then I read a book from one of the people, one of the traders I highly respect, and he had a much better name for it. And I felt embarrassed because structure swap seems corny. But he calls it the ice zone. Is the ice zone or structure swap, is that term new to any of you guys? Give me a no if you've never heard it before, and I'll take some time to explain it. All right. Now, and you'll see exactly why ice sounds a lot better. Yeah, Peter Brandt, man. A lot of people hate him. I love him. Love him. He's old. He tells you what it is, and he doesn't care. I love it. He's like, I've been doing this for 40 years, man. I don't care what you say. This is how you do it. So let's imagine, right? And this is how structure works, right? We always say look left, structure leaves clues, because structures are key points and levels, or key reversal points, and they get respected on both sides, right? You'll see price action do something like this, violate a level of structure, and then end up coming right back to that level of structure and holding, right? Have you guys seen that before? I mean, I just showed you an opportunity, but, right, you've probably seen this time and time again. And you're like, man, isn't that a coincidence? Well, we call it an ice zone or a structure swap because imagine structure acting like a frozen lake, right? Now, if you are a fish at the bottom of the lake, that layer of ice stops you from doing what? It stops you from jumping out of the lake, right? You hit your head on the ceiling. At the same time, if you're someone who's not a fish walking on top of that layer of ice, what does that layer of ice do? Stops you from falling in, right? So it acts as resistance when you're underneath it, banging your head on it, you can't get through. When you're above it, it acts as support, stopping you from falling through. Does that make sense, guys? So when you see these levels in the market, these are very powerful levels because it tells you that, hey, at one point, this was a key area of support, right? You see we bounced off of it, boom, bounced off of it, boom, right? And then once we broke through, that same area turned into resistance, right? Price tried to rally up. Guess where it stopped at? Boom, right at that level. Those are some very good levels to look at in the market. Very important levels. So we dialed down on this trading opportunity. Let me get my chart visible, viewable for you guys. Sorry about that. I have a habit where when I'm doing my analysis, I bounce all over the place. It's horrible for teaching, but it's just kind of my thing. So we can say to ourselves that, hey, our opportunity to trade goes until this level at minimum. So we have from here 189.79 all the way up to about 195.36 as our potential profit. Now, this could be one big trade for you, or this can be a trade with multiple opportunities. Because just because we pull back, right, and we're going to talk about rules and reason for entry later, right? Just because we get a pullback, we get a higher high, higher close in a pullback, does it mean that we're going to get a chance to enter the trade? It doesn't, right? We told you guys yesterday. Jason said, hey, I take about maybe 5 trades a week on a good week, 20 trades a month. We probably look at about 50 opportunities. I can't tell you how many opportunities we're looking at. We're like, come on. I didn't get a reason for entry. In fact, we've had conversations on Skype where we're looking at the same thing, and Jason's like, hey, Kill, you looking at pound Aussie? I'm like, yeah. Looking long, right? Yeah. And I'm like, hey, you in? Are you in? Well, I need this. What do you need? And we're trying to convince ourselves to get into a trade, but we can't because it doesn't meet our rules and we watch it. You see pound Aussie? Yeah, blew up in our face, didn't go anywhere, right? A lot of the times you're going to look at a price chart and it's not going to meet your rules. But knowing that you have opportunity until up here, right? As long as the market continues to ebb and flow, and if it's in a healthy trend, it's going to do some of this. Every time you pull back, this is what? An opportunity to get involved. And what you see so many traders do is so many traders bail if they don't get the first opportunity. Oh no, I didn't get the higher close. I can't get involved right here. Foo, right? You still got 500 pips of potential profit to the upside. There will be more opportunities. You have a good, yeah, I remember that. Jason. I remember the moments when I want to break my rules. So there are multiple opportunities to get involved. And what good traders do is they don't give up. They lock in. If they don't get that first opportunity, maybe they have a secondary opportunity, but they lock in and they stay with the trade until the opportunity is gone. And for me on this one, the opportunity is going to be present until we get to that 618 Fibonacci retracement. And if we violate that level, then there's still a secondary opportunity up to the VS1 level. So good trading opportunity here on pound Aussie. Someone said good question. Was there a question that came through that I missed? I'm sorry, I haven't been paying attention to the chat. I find it amazing how price reacts at structure. There's a bigger fish trying to eat them. Joking, curious. Why the fish? Yeah, why would the fish want to get out of water? I don't know. Why do people trade for the stop loss, right? There are stranger things in life. All right, this makes sense. Perfect. All right. Cool. Let's go to another one. Let's take a look at let's do a different one. I want to give you guys a wide range of kind of opportunities to look at. Let's look at dollar Swiss had one on it. Where's my dollar Swiss at? Do I have a dollar Swiss? Let's find a dollar Swiss. We'll take you and we'll turn you into a dollar Swiss here. I was fooling myself thinking I had 14 opportunities laid out for you guys today. I was fooling myself thinking we're going to get 14 opportunities. I'm like, I'm just going to spend like 2 minutes on each one. And then we end up spending 20 minutes on the first one. Can't do it. So dollar Swiss here, maybe dollar Swiss on the daily, right? We have a few things setting up here. I would first ask you guys, is there anything that you notice here on dollar Swiss? Maybe anything that we looked at yesterday, maybe anything that you might have practiced. What do you guys say? What if I do this? Does that make it anything? Yeah, look at that. Just came off a head and shoulders pattern. Now, hidden in here, this is not what we're going to look at, but hidden in here, we also have something else. And this is where this pattern recognition software comes in handy, right? Now, if you're trained in your eye of identifying patterns, you can probably see one setting up already. If you're not, very simple trick, right? And I'll do this in my daily scan, right? Click this button up here that says on. Give it a few seconds because I have entirely too much data loaded up on these charts. But we should be seeing, come on now. Let's try a different chart. I got too much. There we go. I got like a million bars of data on here. 2 potential advanced pattern formations. You guys see it? In yellow, that's going to be called a Gartley pattern. This is going to be a bearish one. So this would be a pattern where you'd be looking to sell. The completion point starts where you see this big G right here, and it ends at the high of structure. And there's another one down here. This one, not too concerned right now because it's further away, but certainly something to put on your radar. A potential Gartley bearish and a potential Gartley bullish. So you jot that down, keep it on your radar, write it down for later. Typically, I don't pay too much attention to the patterns until they get close to the B leg. This one's a little bit of a shallower completion, so probably as we get a little bit higher, that's when you want to start putting it on your radar. But just like we talked about before with Pound Aussie, you can't forget about these things. You got to write it down in your notes. They're not going to happen too often. Excuse me. So you can't let good opportunities pass. Now, something else is happening here, right? We're coming to that B leg. We know that that B leg is a previous level of structure. Someone mentioned this earlier too, which is really good. We have no trend, right? We have no trend. So we're not looking for any type of continuation, right? In situations where I have no trend, I'm looking for your next level of structure. So I'm looking at my chart and I'm saying, where can price action go? I know that price or structure acts like a magnet. So boom, levels of structure, levels of structure. And you want to see if there's any opportunities coming into that level of structure. Now, you'll also notice this. This is a daily chart. We've had what, 1, 2, 3, 4. We're on our 5th consecutive bullish day. Would you guys agree? 5th consecutive bullish day. Now, let me ask you this question. We'll do a little price action psychology here, right? If you were one of the lucky buyers down here, I shouldn't say lucky, skillful buyers down here, or if you're one of the buyers that got in right up here, where would you be looking to maybe take some profit at? At structure. So let's put it even clearer. Would you be more interested in buying down here or buying up here? Probably more interested in buying at the lower level than the higher level, right? We had this conversation yesterday, right? Less interest as prices for, was it bread, whatever we're looking at, as prices go up. So you think about what may happen here, right? If buying pressure is what pushes the market up, and buying pressure becomes reduced just because there is less interest in buying as we get to a higher price point, what do you think the market is likely to do? Is it likely to maintain momentum? Or is it likely to slow a little bit and maybe we see some type of reversal? Probably slow. Now you look at this from another perspective as well, right? So we talked about the buyers, right? We agreed that there's more buyers interested at the bottom than probably up here, right? Now let's talk about the sellers, right? Obviously sellers right here, they had control. They came down to a level. The buyers got involved. The sellers started realizing they were wrong. And they got out the market, and that just helped the buying interest. Where do you think the sellers would be interested in again? This is not going to be a flag pattern. Very close, though. very, very close. It's going to be a head and shoulders though. The sellers are going to be interested up here. So not only do you have a group of sellers that may be interested in it, but many of you guys mentioned that, hey, if you were a buyer, you'd probably be interested in taking profits at this level. So here's something cool to think about, right? If you are a buyer, and I hope not to confuse people, if you are a buyer and you want to exit a trade, what do you have to do? You have to sell. So we're coming into a level where potentially new sellers are interested in selling. Previous buyers who are taking profit are interested in selling. Is there a potential that the selling pressure may outweigh the buying pressure? I think there is. And Faison says, I won't sell. And again, it's never going to be all sellers. Don't you worry. It's never going to be all sellers or all buyers. That would be crazy. We're just talking about what pressure outweighs the other. So not a bad area to look for some relief. Now, does it mean that it's going to be a long-term sell-off and price is going to crash all the way down to 87 cents? No. It could be a short period of relief and then the buyers can reload and be like, we're interested again. Let's push this thing up to the Gartley pattern. But as a counter trend trader, especially in these rangy type markets, you're just looking for small little moves. So we have that overall theory, right? And if you notice, did we talk anything about entries or stops or targets? No, not at all, right? We're simply just developing ideas. We're being creative with our mind and we're developing ideas. And these ideas are based off experience in the market. Again, I don't think, and I always debate saying this because like Jason mentioned earlier, you don't need to do anything in the market. But for me personally, it helps to play out these stories. Yeah, I don't think. There we go. That good catch, Chris. I don't think. Akil, just edit that part out. For me, it helps when I think of price action in this sense. I don't know do any of you guys find it helpful at all? For some people, it makes no difference. For me, when I can create a story and I can kind of see it and envision people in the supermarket, because I do the shopping for the Stokes family, it just helps me understand it why. And when I understand it, it gives me more confidence. When it gives me more confidence, I'm more likely to follow my plan and not make mistakes. And again, I've debated whether I don't think it's necessary, and I tell this to all the traders I work with. But I think it could be. I think it could be helpful. What if you bought at the bottom? Then you'd be in some pretty good profit right now, rallying up. Probably be looking to take at least a half position at target. And then maybe if you're trading for the extension, depending on your overall prediction, look for higher. Would you sell? Oh, if I bought at the bottom here, would I sell it up here at structure? Is that the question? Oh, yeah. Hell yeah. Yeah. I'm a conservative trader. Yeah. I would actually take my full position off. I have no reason to think that we're likely to go higher than lower here. Right. Overall, looking at the dollar Swiss, excuse me, I have no reason to think that we're likely to expand up to 95, 96, 97s. So when I look at this and us being in a consolidation, right, I'm looking for short counter trend type of trades where, again, just like the pound Aussie, I want to be out at the first sign of danger. My voice is killing me today. So we look at a move from here to here. Let's say we and this was actually a trade we looked at. We'll go down to a lower timer. It's a falling wedge with a higher high, higher close, right? If I'm looking for a trade from here to here, right, this is a 157 pip move. I'm quite fine with that. In all reality, I would have been out right here, knowing my conservative nature at the bottom of this head and shoulders. So, but that's just me. Again, everyone is different. But yeah, I would have been out the trade, correct. But it's not about me, right? Analysis is about your prediction, right? And I would ask you guys this. Does it ever matter what another trader thinks? I wouldn't trail it. No, I'm in and out, one in, one out, no trail. Again, I have no belief. I would make no prediction that price would come as high as it is right now. with my money on the line. So if you asked me days ago, and we probably had this question in the live room, I wouldn't think price would make it this high. I wouldn't be worth putting money on it. But the thing is, we should never worry about what another trader thinks, because everyone's prediction is going to be different. Why is that? Do we all trade the same? Does anyone trade exactly the same? No. So this is why we're going to talk about in the next session, having a process. Having a process, trusting your process, testing your process, establishing belief and confidence in your process, and then ultimately following your process. So if you use trend lines to identify targets, use that trend line. If you use AB equals CDs, use AB equals CDs. If you use the MACD, use the MACD. If you use psychological numbers, use psychological numbers. If you use the 50% retracement, use the 50% retracement. It doesn't matter as long as you're consistent with what you use and you're making consistent predictions. The worst thing you can do as a trader is, and this was so I'll give you guys a story. This was there are a few trades that stand out in my mind. Most of them are bad trades, actually. Only one good trade stands out in my mind. But so when I was learning how to trade, I used to be, don't judge me, I used to be on the chat forum. I used to be on the chat forum. Now, I didn't participate. I just stalked and watched. And Big Pippin was on there, Scotty Pippin, Sir Pips a lot. I like Big Pips and I cannot lie. All those guys were on the chat forum, right? And they were typing in stuff, and I was just following. It was at the time I thought it was my community, and I thought it would be helpful. And you know, as a trader, you're lonely. Pip Daddy, take that. That's what he would say every time there was a trade opportunity. Hey, Pip Daddy, what should I do? Take that. But you're lonely as a trader, so there's just not a lot of community out there. Like none of my friends, except for one, Brad Pipp. We might just keep bringing them in now that we started. None of my friends knew about trading. No one knew what I was doing. So you know how it gets. And so I was on this forum, but I never participated. And Pippin ain't easy. There we go. And then finally, one day, I'm eyeing up this trade. I was probably eyeing it for a while on euro dollar. And I remember specifically because I'm like, should I share it? I don't want to share it. I don't want to be judged. But I should participate. And whatever I told myself, I shared it. I'm like, okay, guys, looking for longs on euro dollar, send, boom. And I'm like, you know, the heart's beating because I'm gonna get judged by everyone. And I'm waiting, and like, you know, finally, right, Big Pippin comes in. And he's like, looking for longs. I'd rather be short. And what do you think I'd do with that trade? I have no idea how Big Pippin trades. Probably a reckless gambler. Yeah, I exited it. I said, well, you know, this got Big Pippin. He's got all these followers. It was like a grading scale. He had all these stars. Like he was the big man on campus, right? So I don't dare go against his projection. So I exit the trade. Do you know what happened as soon as I exited the trade? Do you know what happened? Guess what happened? Went to the moon. And I'm sitting there just watching it. And then, of course, Big Pippin comes on later. Hey, guys, getting long euro dollar. I'm like, what? Right? It was the worst. It was the worst. But it taught me a valuable lesson. Not to give an F with what anyone else says about my trading. I actually made the mistake a few other times as well. This was a harder one. When I was getting coached and mentored, I would often have trading opportunities, and many of you guys go through this. I would have trading opportunities, and my coach used to run this morning session called it was called the Syndicate, where you come in each morning. It'd be like a little 10-minute video of like a few trading ideas. So it was part of my routine. I do my analysis, then I watch it, I compare, and I get ready for my trading day. And I would same thing. I would have these trading opportunities on my radar. I'd have them in my notes. I was doing everything right. Then he would come on and say something, and it would be the exact opposite. And I would just I would bail on those trades because I was so scared. Like, this is my mentor, this is my coach. How dare I go against him? And it took me a while to realize that, hey, we don't trade the same way. Like, his projections have nothing to do with my projections. In many cases, and you guys may not realize this, right? Someone can project short and someone can project long, and you guys can both be right. It all depends on where your targets and your stop loss are at. But I spent a lot of time judging myself based on what others would do. And you just can't do that, because you have to understand that no one is trading the exact same way as you. No one is trading the exact same way. So really, their opinion on the market only means so much. And I think that's very important to understand. Very important to understand. And if I ever see that big Pippin in person, on site, it's on. It's on. I'm still bitter. This was like 13 years ago. I'm still bitter. It's on. So anyway, let's get back to the business here. Getting sidetracked again. No way we're getting to 14 pairs. Why did I even think that? So we had a few things here. Again, here was a nice example of a quiz, you guys. How many of you guys did your homework from yesterday? What is this? Falling channel. What do we expect after this? Falling channel, falling wedge, right? A period of relief. Again, this is the slowing of momentum. See how the slope down is steep? Then it gets less steep, right? I mentioned this, I didn't show you guys this, but here's a perfect example. What can we team this with? This is a good example of divergence, right? I talked about it yesterday, how I use it on the RSI. This is my RSI indicator down here. I didn't show you an example, that was my bad. But divergence is when your indicator or oscillator is doing something different than price action, right? So you see how price is getting lower here, guys? Give me a yes just to make sure. Again, when you do these things live, you can see people's eyes and heads nodding. When it's on the computer, it's a little bit weird. Right? Price is falling, right? Lower highs, lower lows. What is our indicator and oscillator doing here? Higher lows, higher highs. So it's doing the opposite. That's going to be called bullish divergence. It's a clue. It's a clue. You can add it. We call it building a reason for entry. Now, we can look for something similar here at the same point. And again, these things don't always work, right? Look, lower time frame, you go down to the 60, you probably saw something very similar right here, right? At structure, rising channel, did it work? No, nothing works 100% of the time. But you're starting to see something, and we're breaking out of it now, but what was on the radar originally was another one of these rising wedges, rising channels as we come into a previous level of structure. Now it looks like we're picking up momentum again, so that may not be the case anymore, right? And that's when you just scrap the idea and you look for the next opportunity. So this is a perfect example. And again, we're going to talk about rules in the next session, right? Where rules can keep you out of a losing trade. Waiting for something specific, having an idea, or not an idea, but knowing what you need to get involved in the trade instead of just recklessly pushing the sell button can save your bacon. And now you need to wait for an alternative reason. So cool discussion here on dollar Swiss. Let's take a look at, again, I want to look at a few things here. Let's go over to, I'm running out of time already. Got about 15 minutes left max. Let's go to, you know what? Let's go to oil. Where is my oil chart? Let's go to oil and show you guys some commodities here. We're going to go to the U.S. oil. Oh yeah, sorry. Seven period RSI, 80 and 20. Anthony says too much wisdom. Yeah, I don't know. I was so confident this morning where I'm like, I'm just going to blast through 14 pairs in 3 minutes each, and we're going to get through it. Knowing I can't shut up. I told my wife, she looked at me, she's like, all right. I'm like, you know nothing about trading, babe. How do you know how many pairs I get through? She said, I know how much you talk. And then I shut up and left. I should have known better, but I was optimistic. So let's look at oil, right? Different type of market, but technical analysis is the same across all markets. Now, Each market has its own personality. Each pair, each sector, I would even say, or individual stock inside a market has its own personality. So what that means is that just because something worked well on something else, does that mean it's going to work the same on a random pair or a random market? No, right? This is why you have to test. This is why you have to put in the work to actually see. You have to know your numbers, right? But you're going to see across the board, the concepts are still going to be the same. So if you're skilled, if you're a skilled chartist, meaning skilled at the ability to do technical analysis, it's going to give you a massive advantage in the market. I'll give you a good example here. So let's say you're someone that's interested in buying oil, right? Me and Cody have been laughing to the bank with this thing since, when was COVID? Was it last year? 2 years ago? Gosh, it all goes together. It had to be last year, last summer. I don't know. We're still in COVID. Delta plus variant, whatever the next one is. But anyway, so we have a few things happening here, right? So we are trading at a previous level of structure currently, right? But we have something else setting up. Can anyone see what that something else is? Not a double bottom, no. I guess depending on how you define a double bottom. Wouldn't be double bottom for me, but I get what you're looking at. What if I do this? If I take a Fibonacci retracement from this swing low to this swing high, does that give you a clue? What if I take a Fibonacci extension from this swing high to this swing low? Does that give you a clue? What if I took this and did swing low to swing high, X to A? Actually, I'll do this. Let's make it easier for you. So you can see it. Swing low to swing high, X to A to B, B to C, and a CD completion down here. This is going to be a deep Gartley pattern, right? This is a bullish pattern, right? This is a bullish pattern. It's also going to come at a previous pullback. So this is a perfect example of how you can combine different things in the market, right? You can look at this as just an advanced pattern formation in its own right. But this advanced pattern formation, this can be an entry reason into a bigger potential continuation trade. And depending on how you're placing a stop loss, right, you can set yourself up with a very low risk opportunity, right? Now, I'll tell you the adjustment I would make right now, right? But traditionally, you would do something like this, right? Your entry would be aggressively right here at the 127, right? We're going to put your stop loss here at the 113. This is the beauty of a deep Gartley. If you're just trading this as a Gartley, your first targets are going to be right here at your 3D2. 2.4 to 1 risk reward. Second target is going to be up here at the 618. 3.85 risk reward. However, if you're someone that's looking at this as a trend continuation opportunity, and let's say your first targets are going to come off at here, the C leg, previous level of structure, then you're going to trail the rest of it, right? Do some active trade management. You're setting yourself up with a fantabulous risk reward here. Would you guys agree? And of course, there are endless ways you can do this, right? If you trade multiple positions, you can take a conservative target out and then hold for the bigger move of your secondary one. Or you can just hold the bigger move of your whole position. I don't care. It's up to you, right? But a great opportunity. Now, one thing you may want to do here, if you're someone that's taking the bigger target, meaning shooting for a continuation, right? This is a level where we have what I call overlapping structure, I guess underlapping structure, where you have your level of structure here. You have this sneaky level of structure right here. This lower level of structure is going to be more powerful, right? So again, if your rules allow it, if you can make the risk reward work, in my opinion, it's worth giving yourself a little bit more breathing room down here, Now, again, this is me. I'm a conservative nature. I am completely fine with a 2-to-1 risk reward. Now, if you're someone that requires a 4-to-1 and doesn't meet your rules, you can't do it, then you gotta stay where you stay. There's nothing wrong with doing it. But these are the examples. Again, all traders don't trade the same. So we just had this conversation, right? Let's say Matt and Laura both ID'd this trade. Let's say Laura's taking this like a traditional Gartley, right? Stops right here, 3D2 first target. Let's say Matt is taking the continuation one where he has a 5-to-1 risk reward. Let's say because of that, Matt decides to put his stop loss below here. Laura keeps hers at the 113. Which of these traders is wrong in how they're attacking this trade? Neither. But a perfect example of two different traders, even two different traders that are looking at the exact same setup, can approach it in different ways. And is one better than the other? No. Hopefully, if they're both following their rules, they can both jot it down as good trades. And that's what matters at the end of the day. It's not about profit and loss. It's about your good trade, bad trade ratio. Can you have 100% good trades? And we haven't talked about good trades, but good trades, right? We believe in process over outcome. Good trades are trades where you follow your rules 100%. Win or loss, doesn't matter. A losing trade where you follow your rules 100%, that's a good trade. A trade where you get in by mistake, it's not one of your trade plan, but you win, that's a bad trade. That's a very difficult shift to make. It's a paradigm shift. It's a very difficult shift to make because in life, I mean, everything else in life, we're judged by the result, right? You take a test in school, right? You get a good grade, you're good. You get a bad grade, you're bad. I don't know if it should necessarily be like that. I think the process should be taken more into account. I had a lot of math tests where I did everything right and I forgot to carry the one. And I think a good teacher should have looked at it and been like, Akil, your process was correct. You just made one mistake. Instead of just being, oh, Akil, you failed and got every question wrong. Like, that doesn't help me. I got some issues with the teachers I used to have. But process over outcome. I have one question. Sure. Just one. Shoot it in. We're going to take a look at Bitcoin next. I'm trying to give you guys examples of different things here. We talked about this in the weekend video, but this would be a good one to help. Bitcoin actually had a very nice cipher down here, man. One of our live room members caught this. How about that? While I'm waiting for this question to come in, I think was this you, Nikki? Are you here? I feel like it was either Nikki or Bobby. Was this you, Nikki? Yeah, it was Nikki. Yeah. How about this? This was I don't really watch Bitcoin too much. This was a brilliant one. This is another good example of a trend continuation trade, right? With a nice cipher in here. Right here. You ended up getting a retest. Bigger picture here. Yeah, this was great. So I've been bragging about it like I saw it. I didn't find this. One of our traders found it. I'm just taking credit because without me, there is no him. Without me, there is no him. And without Darren, we wouldn't have the cipher pattern. So I guess all the glory goes to Darren. You're always taking the shine, Darren. That's horrible, right? Yeah. So and we're still waiting. Type your question in whenever you want, Faison. But so we had a cipher pattern here, right? This is small picture, right? But bigger picture, we've been in consolidation with Bitcoin, and just like we looked at with the pound Aussie, right? We're looking for a breakout of this range one way or the other, right? And you can see that right before this cipher. What do we have right here? This was a higher high, higher close, right? This was a violation of structure, right? So we broke out to the upside. So same thing if you remember the pound Aussie analysis, right? We looked at this We saw the higher high, higher close. We can make the prediction that price is likely to go higher. Again, if you're a breakout trader, you're probably screwed, right? You were aggressive, you got your breakout, and then price came right against you, and you probably lost. However, if you're a pullback trader, you're looking for a pullback into that range. And again, going down to the lower time frames, right? A few things either happen, right? Either you got an entry reason right here. If you're aggressive, higher high, higher close candle, 3-bar reversal, I should say. You guys see this little boy right here? Failed 3-bar reversal, but a 3-bar reversal nonetheless, right? Or, just like we talked about with oil, cipher pattern. And not just a cipher pattern, but a cipher pattern, a bullish cipher pattern in a bullish continuation opportunity. Now, here's the key thing, right? Obviously, this was a big, massive move, right? What separated traders? We see this all the time, and I actually spoke to a few traders after putting this in a video who took this trade. They took traditional targets on this trade right here, and then they were quite mad. Right? They were quite bothered when we showed them this in the weekend video because they left a lot of meat on the bone. Now, again, nothing wrong with taking that traditional targets. Nothing wrong at all. But if you have an opportunity to get more in the market, wouldn't you rather get more? And I'm not saying forcing the opportunity. I'm not saying blindly shooting for different levels, but this is where the skill of analysis comes in handy. This is where it can give you a slight edge, right? Because you can identify this as a cipher, right? And that's great. This is why the skill of pattern recognition, pattern identification is cool. But if you have the skill of reading a price chart, you're going to be able to identify, just like oil, that this is a cipher pattern, a bullish cipher pattern in a market where we're looking for a bullish continuation trade. Now, most patterns don't happen like that. Most are counter trend, but every once in a while you get one that lines up with the underlying move, an underlying prediction. And you have to take advantage of those opportunities. Again, if your rules allow, you have to take advantage of them. Because those are going to be the trades that give you new equity highs in your equity curve. And it's a small difference. It's a small difference. And I'm not saying you start off that way. In fact, I would say you start off by just trading the pattern, don't do anything fancy. But as you evolve as a trader, you start putting more of the clues together. And all of a sudden, an opportunity, again, that looks like this is going to be an inverse risk reward. I'm just going to do it really roughly. An opportunity that looks like this, maybe a 1-to-1, looks a lot bigger. And that makes a difference. It's those very small differences that take you from one level to another level. Right? Remember I showed you the picture of the bridge yesterday and all those small little parts flying around, right? It really is the small things. It's about putting those small things together, those small clues together and seeing how they fit. But a good example of this is the projection and the next potential trade, right? So the next question is, okay, so if we go higher, right, where are we likely to go to? Well, there's a few things we could do, right? We can take a look at structure, right? We can see a key structure level right here. Price has come down. We've bounced off this level. Bang, bang, before eventually breaking down. So just like we talked about the ice zone, right? There's a chance that price is going to reverse somewhere in this level. Now, what we need to do is we need to use our skills to identify where. So this is where, remember that thing I told you guys yesterday that blew me lots of money? That AB equals CD pattern? Because I was using it wrong. This is where it comes in handy. So what I can do is I can project a 1-to-1 measured move. That's going to put me up here. I can also look for a Fibonacci extension, see if there's any confluence there. We're going to wrap up after this. I got a 1618. Again, it's in red because that's the golden mean. And I can also look at a Fibonacci retracement, right? I can take a few of them, actually. One from this entire move right here. And I can take one from a smaller move as well to see if there's anything that lines up, right? Nothing's going to line up from the smaller move. But you'll see a few things here, right? We have an AB equals CD pattern. We have a 618 Fibonacci retracement. We have a 1618 Fibonacci extension right at the upper level of this structure. Pretty decent place to make a projection, guys? And this works on two ways, right? If you're bullish, this is an exit for you. If you're someone who look bearish, this is your next potential level to look for a bearish trade. And that's the thing that I think most people need to realize about trading, right? There's no such thing as bullish analysis and bearish analysis. There's just analysis. Analysis is the same. The process is the same. The skill is the same. It's all about how you decide to use it. So if I'm someone who is long, I'm analyzing this market the exact same way as someone who's looking to get short. Does that make sense? I'm only taking action differently. Where if I'm long, I'm doing this analysis to project, hey, where would the sellers be at? Because I want to be out of the trade before those sellers get involved. If I'm looking short, I'm saying, hey, where are the buyers probably getting out at? Because I want to get in where those buyers are getting out at. And it's a beautiful blend because, again, if buyers are taking profits, buyers become sellers. So as someone looking to sell a counter trend move, you're asking yourself, okay, when is the buying pressure going to run out of steam? When are these buyers going to become sellers? Because in order to get a move down, I need selling pressure. In order to get selling pressure, not only do I need new sellers interested in the market, but I need those buyers to be out of the market. And those are those beautiful blend levels. I hope that makes sense. It always makes sense in my head, but sometimes my head's a weird place. But does that make sense? I think if you can grasp that concept, it brings an entirely different light to your technical analysis. Now I'll end on this. I did miss a question, and then we'll get you out of here. Where did it go? All right, we're looking at real quick. Eddie says, Akil, I don't know much about harmonics, but is there a element of subjectivity about them, or are they black or white? The requirements for the retracements and extensions are black and white. The ability to read the price action that makes up those legs, there's going to be some subjectivity to that. That is going to be skill based. That's where you're going to have to train your skill. Or something that helps is if you want to use the pattern recognition software, right, that will eliminate the subjectivity because that's going to be consistent in everything that it analyzes. So all depending on how you want to approach them. Bitcoin has a descending channel after a sharp drop, announcing potential reversal upside on one day. Let's say you have this pattern. Okay, we're going back to Bitcoin. We're on Bitcoin. Okay, let's say you have this pattern and you took it and you're stopped below the white line. So if you entry the trade and then the trade hits the white area, you find another opportunity. Will you take the entry the other way around and add on to the trade? Talking about U.S. oil. If there's another valid opportunity, yeah, I take the trade. So let's just, I want to get this question done because it bothers me when I don't have questions. So are you asking what? If price action goes past the stop loss here, will I trade it again? Is that basically the question? Yeah. If it's a valid trading opportunity, yeah. If it meets the rules, yes. The previous trade has zero effect on the next trade. There's only one. Here's this is what makes things very, very simple, guys. And this is going to take care of a lot of the confusion you have in the market. I have one question that I ask when it comes to, there's only one determining factor on whether I should take a trade or not. Do you guys know what that determining factor is? It's only one. And this will make your life so much easier. It's very simple. Doesn't meet my rules. If the trade meets my trading rules, I take it. If it doesn't, I don't take it. It is literally as simple as that. Now, setting up your rules is a process. We're going to talk about that after the break. But once you have those rules, once you put into work and you've taken those rules, it is literally as simple as looking at your trading plan and asking yourself, does what I see on the chart, does that meet what I have in my trading plan? If it does, you take it. If it doesn't, you don't. Bang, boom. There's no thinking about it. There's no thinking. There's no feel. There's no gut. It's like, does it or doesn't it? Black or white, 1 or 0. So simple. The problem is most traders don't do it. Most traders rely on their gut. And their gut is based off the previous experience. So if this pattern loses, all of a sudden they're scared and they won't take the next trade because the previous trade just lost, and they keep that emotional baggage with them. You can't do that in business. You can't be emotional in business.